Hello, Warriors. Hope everyone had a good Fed day. Wow, what a Fed day. Dixie exploded, Euro crashed. Janet had some testosterone going yesterday, guys. She went ahead, gave a very constructive, hawkish view. So like we were talking yesterday, everyone was looking for a dollar rally. I was looking for one more low before this happened. With that being said, I don't chase anything, nothing. I'm going to let it come to me. To me, it looks like even if this is a major low for a rally back to 94, I know a lot of people looking for 97. I would wait for a break to 92.10, and I really can't completely rule out, although probabilities have decreased dramatically, that we still haven't gotten a close over the 200 moving, and it's still possible that this is ABC and we get another shot down, but you have to go with the mode that it gave you yesterday. My preference here is still looking for potential pullback in yen. Kind of lines up with some of the things that I'm seeing here on ForexAnalytix. Canada, in fact, is at this previous support resistance level, and for it to be invalidated, for us to get a move to new lows, we're going to have to close back over this high, back over 124. So we'll see if that happens. Also, Greg is even looking at some. He's not convinced either when it comes to the Dixie. So I'm going to give you a look at our website. One of the reasons I'm doing that, and let me also welcome investing.com viewers. I'd like those viewers to know that we have a fall special going, but as you can see, Greg kind of has the same scenario, that it is still possible that we get a failure in the dollar for one more low, that this was just a bit of a detour. Instead of going straight down, we may have had a shakeout day, took out the stops here, and we're going to have to get over this 2. Looks like 93.30 is going to be his line in the sand for the count changing. Everyone with me? Give me Y if you're with me. Also, I want to show the special seasonal sale for ForexAnalytix here. Buy 1 month, get 1 free. Buy 6 for the price of 4, and buy 12 for the price of 8. So this goes till October 2nd, and just like trades, they have a window of opportunity to execute. Same goes for this offer. So we do have a link here in the room for you to get going and have a great fall with us. The fall starts the 22nd. That's tomorrow. Last day is summer. Kids are back at school. Time to get serious about the markets. And if you're serious about the markets, you really need to have some allies. And you have a lot of allies here at ForexAnalytix. You have Blake. We all know what Pipsar can do. Nick's Harmonics. Greg is Elliott. Stelius is Macro, who nailed Euro Pound with bullish cable while the whole world was bearish. Great macro analysis. Steve is one of the better technicians I've ever met. Does a lot of candlesticks. If that's your forte or you want to learn about sticks, we have a great educational section here. And then there's this guy, Forex Stop Hunter, who is talking right now. So I've coached and mentored many people. I share what I know with what I've been doing for well over 30 years. I think I'm heading towards a 40th year. I became licensed in '76. Yeah, so over 40 years experience. I'd say we have well over close to 100 years experience combined. Okay, Luca was long, looking for 114. How are you, Patrick? Jeff? Glad you had a nice vacation, Patrick. Glenn. So the new season offer is valid till October 2nd. I think Greg also he's looking for a top here. It's not that classic, but RSI is diverging a little bit. what disappointed me really was I was looking for a top in Aussie, and I didn't quite get the third drive. The dollar really exploded. We came very close. Looks pretty vulnerable here, but this too I can't chase. It looks like we're rolling over in the Aussie, which makes sense since gold is still under a lot of pressure, right? Gold, all the gold bugs feeling the heat at major support here at 1292. So here we are. We're actually trying to negate the breakout. Everyone thought 1300 was a good breakout, tested it once and went. I think you have to be skeptical about the gold breakout now. It looks like it could be a false breakout, and we may be on our way. Should we start penetrating here, next stop's going to be about 1245. And I'd be paying attention to some of the end crosses here. I think you could short across the board. There's your guppy. That's your daily. I'm just talking about scalps and retraces. We're diverging pretty good in the guppy here. We could definitely get a pullback to 48, and Euro Yen as well. Maybe one more high. I'd like to see one more high. You'd get some divergence, but very possible that we get a break back down to 132. The only market that wasn't affected much by the hawkish talk, of course, was you-know-what. The rubber beach ball being pushed underwater, sold off a little bit, and then it's trying it again, pretty quiet. We're heading into the equinox. I thought that we might have a shot for 25.18, starting to look heavy. There's not much I want to buy here today. So looking at the pound diverged up here. I called it out in our new live trading room, which is also something that you guys can join if you have at least a 6-month subscription. Just want to show it to you guys. Like Blake says, I could put you on the put it on the Jumbotron. So after market hours, after face, you can see that there's a lot of sharing in here. There's 52 in here. Very good traders that are very helpful, trying to help everyone out. Everyone, guys, in the trading room, you're also on the Jumbotron now. So this is another element that was not part of our subscription going into our new offer. Blake's in here all the time. Most of the team is in here most of the time, as you can see. Over 50 people in here sharing ideas. It's a great asset because it's open 24/7. Okay. So consider that as being a great bonus, because after we close our webinars with an hour of analysis and a half-an-hour interview, and we have a great interview today. We have At the Female Trader. So Anna Kozin Nasser will be with us, and Anna, last time I think Euro was trading 107 or so, was very bullish. So that was, you know, $10,000 ago per contract, so stick around for Anna. And that's it. You know, if sometimes if you don't get the setup you're looking for on a major red event like yesterday, which I didn't, I'm going to have to get headed for 160. I think you're right. Longer term, but I think we're due for a retrace. Greg still has a little bit more downside left in there, Jeffrey. So we'll see. It's okay to do nothing and don't chase anything. I mean, if you're bearish to the euro and you think that that was it, still could be retraces back to 1940. When you look at the daily, and this is something Steve brought up, and we talked about it yesterday, that when we were up here, that it could be a right shoulder of a head and shoulders top, but Steve's discipline was, you know, we still needed it under the neckline. right, which is 1840. That hasn't happened. So I think the biggest surprise would be for the dollar after having a big day for it to start to fail and even get one more high. That would definitely surprise most market participants after what happened yesterday. So even on the 4-hour, we're holding some moving averages. I don't rule it out. So I'm flat. I may miss some things, just like I missed this candle yesterday because I was looking for one more high. Wanted to see a stop hunt over this high. I don't need to do anything any day. I don't need to do anything. If you find yourself saying, I need to find a trade, you better shut down your platform, because the good trades will slap you right in the face and will be so compelling you won't be able to ignore them. So I'm very interested in hearing what Blake has to say after yesterday's action in the Fed, but definitely Janet Yellen gave the dollar bulls everything they wanted yesterday. So let's see if it's more than a one-day wonder.
Well, the question is it enough? What it and is it enough?
Okay.
You know, I got asked this morning. You know, why did I close out? I had a pattern in play for the gold, and I closed it out this morning, and people were wondering. Well, the thing about the dollar is the dollar. It's still, if you, this is the dollar index, right?
Mm-hmm.
If you take a look at the dollar, we spiked and we hit Monday's highs, right?
Yeah.
Yesterday.
No
now we're flagging, no follow through yet, but I'm a little nervous that the dollar hasn't blasted higher yet. Now, can the dollar still move higher, and can gold move lower? It can, but it hasn't. So, you know.
So you're kind of with me. You want to see more evidence that's significant. Yeah.
The dollar's been extremely bearish, guys. And now I'll tell you, I was hoping the dollar would rally yesterday, and I didn't think it would, but I was hoping it would, and it did. But I've been very unimpressed with the dollar's performance thus far. Now, does that mean the dollar's not going to go higher? No, it can, but again, I need, like, I think you used a perfect word there, evidence. We are outside of the channel now. Okay, we're outside of the channel. REITs are moving higher, bonds are moving lower. You can see here's like the 10-year, you know, bond market's moving lower. We got the 200-day moving average coming right into the bond market right here. But both bonds moving lower and rates going up, you would think that the dollar would follow through, and the dollar hasn't yet. We're peeking our head above this channel resistance here. You can see the channel resistance, but again, I'm skeptical. And I'm not fully on board yet, and that's why because if you go over to like gold, for example, I'm going to take you over to gold because this is one I was watching in particular. You know, broke through the 1305, 13 level, and it's been pushing lower, but we haven't seen, without seeing any of the dollar upside follow through, I'm a little nervous, and so, you know, anyway, you can always get back in the market. That's the way I always look at it, is you can get back in, and if you're not feeling comfortable, there's nothing wrong with, you know, flattening things out and looking for a reentry. There's nothing wrong with that, and so I think you gotta, you know, play it as such right now. You know, stocks, I'm surprised the stock market is as strong as it is. I'm surprised that, you know, as we raised rates, or not as we raised rates, as the market is looking at higher rates and bonds are dropping, I'm surprised that the stock market is as resilient as it is, and the stock market isn't backing off either. So, you know, right now, I think, you know, you just have to be a little bit careful. I think a lot of people want to buy the dollar, and I think the dollar has potential to rally. But like I look at these Nordic currencies, here's the US dollar Swedish krona. This is pretty good for me, canary in the coal mine, if you will. You got the US dollar Swedish krona that cannot, here,
Yeah.
I'll get rid of
Still
some of
doesn't
this.
look so great. Yeah, it didn't even get to Monday's high.
No, not even close. Here,
Yeah.
I'll just do that. Yeah, this is the US dollar Swedish krona. I mean, until I start seeing it really peek its head up against, here's the Norwegian krona, still trading pretty heavy. I'm not 100% convinced. I do think that, some of these emerging market currencies could go lower, like the US dollar Mexican peso is trying to peak at higher. I mean, especially if we see a little bit of risk aversion, we could see a rally in some of those. But again, I'm not. And look at the euro. The euro is rallying right now. Look at the euro.
Blake, you're also talking about the bonds, and really the damage was on the short end and the 10-year, but the 30-year, like I use the TLT as a proxy for long terms. It's an ETF.
Yeah.
It was higher on the day yesterday. The long end hardly suffered.
Right.
So the yield curve is what? It's still flattening, not inverting, but that's not a great sign of economic strength when the Fed is raising short-term rates and long rates don't back up.
Right, and so this is exactly what your point here. As you can see, the shorter term, shorter dated securities. The bond market's sliding, and the long end is not.
Look at that.
Yeah,
looks like looks okay.
Yeah. So, again, something's fishy here, and that if you look around and you go, okay, well, why the heck is the dollar not rallying? And and so I was short precious metals overnight myself, personally, and I'm like, I'm just not comfortable, just not comfortable with it. And now you got the euro. Look at the euros breaking yesterday's highs. I mean, this is squeezing right now.
Yeah.
This is yesterday's highs following the FOMC.
Yeah.
We're breaking higher. I mean, what show of dollar strength is that? So, again, I'm not convinced yet.
Yeah, I mean, we're only 100 pips away from new recovery highs. I mean, that could happen in a heartbeat. So, I still think it's possible. I'm not trading it that way, like shorting the dollar, but I can't buy it either. So I'm an observer, a spectator right now, rather than a speculator.
And
I'm okay with that.
There's nothing wrong with that, Dale. There's nothing wrong with that. There's nothing wrong with standing aside and saying, okay, well, I'm just not really comfortable with the market. And like I look around and I'm trying to figure out myself, what I'm gonna do here. And it's like I was looking at the pound and I'm like, I still want the pound to drop to 134 here so I can buy it. I've got orders out, to be a buyer down here, and I keep wondering if I'm going to be able to get it. And again, you go over to yesterday's move by the Fed, and you go, well, if the dollar can't rally on yesterday's news, what is going to make the dollar rally if the dollar can't really break out? So. Again, I
can say this though, Blake, that should the euro have enough gumption to make a new high because of yesterday's weakness, it's going to build the case even stronger for a euro top and a dollar bottom because of the damage, at least short term. It's taken away a lot of relative strength. So if it could manage to grind up there, it's going to be a better short than if it would have gone straight there yesterday. Do you know what I mean?
Right, yeah.
A little bit, because it took a lot of the relative strength out of it. So it'll be a struggle for it to do so, and that would make it an even better short than it would have been if it just blasted to 122 yesterday.
Yeah, I think if it can get to 122, I'd be a seller. If, as we talked about yesterday, up to that, 50% retracement up here. So anyway, I mean, just looking at the euro dollar, I'm not buying it, but I'm not shorting it either. And because
it's a range.
Well, it is a range. I mean, theoretically, technically, I should be buying the euro here just because I know it's so close to trendline support, and but technically, when I trade like technicals, it's only half of the picture. If I can't get the other half of the picture, the fundamental reasons why I'm doing something, then I don't. It's not jiving, and it doesn't make sense. Like, for example, yesterday, based on what the Fed, said, did, the dollar should have rallied, and because it's not, it's like, okay, well, maybe I should buy the euro dollar here, but at the same time, based on what the Fed did yesterday, I really shouldn't be. I shouldn't be long the euro. I should be long the dollar. So again, this is where the analysis isn't really jiving with what I think should be happening. So therefore, again, it's time to be a bystander. What I have been trading though is I picked up the Euro New Zealand overnight. That was a nice trade. I picked it up yesterday actually and sold it yesterday evening as we were bouncing back above 162. Picked up the pound New Zealand, did the same thing. I bought that thing lower down here and sold it last night. And those have been nice traders. The thing is, we got the New Zealand election coming up this weekend, and I think if the polls tighten up here going into the weekend, we might see some Kiwi weakness. Kiwi's been pretty damn strong. It's been pretty resilient. So I mean, it's been outpacing a lot of different currencies. I know it's come down a lot since yesterday. We had a little false break above the 618, but still, if you look at it like in relationship to the Aussie is actually breaking lower. So I think there are still some opportunities out here. I'm just I'm trying to figure out exactly how and what I want to do today in general, and we have Draghi. He's speaking today, and I guess the question is, well, Draghi is speaking. He's delivering the opening statement at a symposium conference in Germany, and I guess if he tries to talk down the euro, I think most people are expecting that. But if he doesn't, maybe the euro continues to move higher from here. I don't know.
We got a great question, Blake. Did the DSI change much after the dollar's strength yesterday?
I didn't. It's interesting. I didn't look because DSI has been pretty neutral. Let me pull it up really fast.
It's gone up to 22.
Okay, that's a big jump. Big jump.
Well, for the dollar?
Yeah.
Yeah, dollar index is up to 22.
Yeah, so it went from 8 to 22.
Well, it actually went from it was 8 like a week and a half ago. It's gone from 13 to 22.
Okay.
So DSI has picked up here. I'll grab it for you guys. You can see it here. So yeah, the DSI went from it's 22 yesterday, thanks to Stelios, and it was 13 the day before. So it did jump a little bit, but it's still in pretty weak or bearish sentiment territory. So it still has room to turn higher. But again, I would assume Stelios and Steve have some better ideas of things to do, because I'm kind of in a yesterday I was like in a bit of a standstill as well. I traded the US dollar Canadian. I tried shorting that yesterday, and I actually ended up losing like 40 pips, but then I made a lot more money on the Mexican peso because I bought that at like 1768 and I sold it at 1779 or something, like on the spike up here. So I made, I lost some money on the Canadian short, and I bought the US dollar Mexican peso and made back everything plus in spades. So, but I'm kind of, again, I'm at a standstill. I'm not really too sure what to be doing here. And Stelios, since you spoke up a little bit, what are you seeing out there that really catches your eye? Because I'm not too sure.
Yeah, well, speaking of the dollar, if you remember, was it a week ago or 10 days ago when we were saying on the webinar that the market was pricing about one rate hike until the end of 2018, or maybe just over one, which we did say at the time, look, this is not a lot. There might be something that happens, some kind of hawkish rhetoric or some good data, and it can easily go to pricing 2 hikes until 2018. It's not unreasonable. I mean, after all, we're expecting one in December, more or less, and one more in 2018. Yeah, it's doable. And now, if you look at Fed Fund futures, they're pricing about 43, 44 basis points. So we're getting to pricing 2 hikes now, which I think is probably on the fair side. So now I am a little bit stumped as well, because before, if you remember, we were talking about a short-term bounce in the dollar that was possible. It's happening.
Right.
But in terms of what's being priced in based on fundamentals, I think it's all very fairly priced. It's very annoying because it does not give me any ideas on something to do with the dollar.
See, I mean, I think that's probably the
Yeah, that's a quandary. The fundamentals say buy the dollar. The technicals say not so fast.
And I think that's the issue that most people are having today. I mean, we're it's not like I'm looking at something different than Joe Blow or Mary Jane at Citibank or Goldman Sachs. I mean, we're all looking at the same stuff, and we're all sitting here with our thumbs in our butt going, well, what exactly should I be doing right now? Because it doesn't make a whole lot of sense. I mean, we've got some data coming out. Is that the data this morning with Phil Fed and and weekly unemployment claims. I mean, are they going to be such blowout numbers up or down that's going to really move the needle much? I don't think so. So again, I'm trying to figure out what to do myself, and I might get some guidance, and I think I might get some guidance here in the dollar yen. I mean, the dollar yen still, this thing, I have to delete that because we bypassed the wedge. I mean, the dollar yen, has been pretty damn strong, and my fear is with the dollar yen is maybe the dollar yen starts to give up some of these gains. I mean, we've gone from basically 107 to 112 in just a week and a half. So I mean, it's been huge. It's been, or 2 weeks. Yeah, it's been a really, really big move with the yen, and the BOJ didn't give us any clues last night other than they're busy just letting every other central bank try to move, and they're happy just standing put. But if the dollar yen starts to give up some of these gains here, my fear is that it's going to get some leakage into some other dollar pairs. I mean, is it unreasonable to believe that the pound dollar could be sitting back at 136, ahead of tomorrow, or the euro dollar could be back at 120? It's not impossible, and that's why I think we have to, we have to watch the dollar here. I think getting aggressively long the dollar at this point without the dollar index following through is very dangerous. So
redrive pattern there. What's the time frame on that? The 1 hour?
It's a 5 minute. The reading one is a 5 minute. We have data coming out here momentarily, so I just want to.
I bet Mr. Confirmation has some ideas, and do you know who Mr. Confirmation is?
That would
Blake.
be Mr. Steve. Yep, hey. There he is. Yeah.
Good morning.
Yeah,
good morning, Dale. Good morning, Blake. Good morning, Stages. Good morning to everyone.
Morning.
By the way, on the other hand, Blake, as you're also implying as well, it's not easy to go ahead and sell the dollar once again, after yesterday without any confirmation that the downside is continuing. And I think this is the conundrum that the market is finding itself at the moment, that people are a little bit numb at the moment because we haven't seen a bigger move yet, and obviously somebody will have to take the initiative to start going in the market and producing. And somebody, obviously, I mean, like the big forces of the market. And on the other hand, are you going to sell the dollar today after yesterday? It's a very tough decision, isn't it?
Right. I mean, yeah, I 100% agree with you. And I mean, we just had a bout of strong dollar data, so it's like, okay, I'm a little hesitant. After looking at the dollar index has slid. I mean, you just take the since this down channel, just since the beginning of summer, really. I mean, we've gone from 98 in the dollar index to 91. So it's too weak to be bought, but it's too oversold to be shorted. So we're all sitting here, kind of as I think, Dale, as you put it, it's a little bit of a conundrum right now. I'm not really too sure what to do. It's okay not to know. I mean, everybody.
I guarantee you by Monday, Tuesday, we'll be active. Okay,
here's the common fallacy for most traders is that they sit in front of a computer for, you take myself, I might sit in front of my computer 12, 13, 14 hours a day, and you feel that, my God, I've been sitting here, I've got to do something, I've got to get paid for my time, and the market will pay you over time, even if there's some inaction. And right now, like, there's not enough action, or there's not enough that's enticing me to take a position in the market, and therefore, I might be better off just sitting in cash right now. So, and I think that the average trader needs to get that through their head, that it's okay not to, cash is a position. I know you hear people say that all the time, but what does that actually mean? Sometimes it's okay to sit here and go, man, I'm not really too sure what to do, so therefore I shouldn't be doing anything, regardless.
The market's not on our schedule, Blake. It's on its schedule.
It's not. It is.
By the way, Blake, I think so, because I lost a little bit of the starting part of the webinar due to a meeting. What I think we didn't discuss about at all is the remarkable inaction of stocks. I mean, it's like nothing happened yesterday.
Oh, no, I did mention that. It's like
sorry,
but we could, you could talk a little bit about that as well. No, I mean, you look at the S&P and you're like, wow, with bonds dropping and rates going higher, it's like, how is the market? I think that's one of the other, pieces to this puzzle. And by the way, gold is dropping right now. Another piece of the puzzle is, why isn't the stock market moving? Why such inaction? But, guys, I'm really, as far as the currency market's concerned, I'm not really too sure what to do. And I do know that if the pound gets to 134, I am a buyer. I know that. And I'm not really too clear on anything else. And that's 100 pips from now. So I'm probably going to pass it off to you, Steve.
Blake,
yes.
Another question, you might have mentioned it. Are you selling Loonie at 124?
I sold it yesterday at 123.80, and then I closed it at 66, like a bozo. I had such a great price yesterday. I sold it right here, and then I closed it right here. I literally made money right there, and I was going to sell it on another move to 124, and the reason why is because this is the broken daily trend line. I was waiting for it to get up to 123, 124. I would, I guess, on a move up to, if we can get it. I don't have any orders out right now. I think I would be interested if it got up there. I just don't know if it's going to get up there, So.
We're not so far away at the moment, to be honest.
No,
It's
no. I mean, it's still good. I guess theoretically, it could still get up there, especially with gold. Gold's really actually selling us. So silver. The precious metals are. See, the precious metals are telling us right now the dollar should be going up. Yet the dollar's not going up. Again, this is the problem. You know, this is the problem that I'm facing, that you're facing, that we're all facing. It's like, okay, we see things happening, but why isn't the currency market responding? And that's where all these question marks arise right now. So
I think we just have to give it another, like, perhaps 24 hours, or perhaps, you know, there's a lot of thinking going to be happening during the weekend, and we might see some fresh positions going in the market starting on Monday, because probably the market needs to digest, you know, yesterday's news, because everybody was expecting a big downgrade on expectations, since we had obviously had some worsening data coming out, but you know, them reiterating that, first of all, they're starting the tapering, second of all, I mean, the balanced reduction in this case, it's not tapering, and on the other hand, that they're still committed for 4 more hikes to the end of 2018, was definitely something that caught a lot of people off guard.
well, it is, but again, why the lack of response to the dollar
Yeah,
from here?
yeah,
You
yeah.
know,
I agree with you. You know, as it seems, a lot of people have been burned lately trying to be long the dollar, and I'm guessing that everybody's still looking for some confirmation, and, you know, not easily taking the decision to commit fresh money in the market. That's what I think it is.
Yeah, and I would 100% agree with you. That I would 100% agree with you in this case. Well, guys, you know, and I'm sure going to take them through some crosses, because I think there's some opportunities. And like you take a look at the pound Aussie, pound New Zealand, you know, pound Canadian. I think there's a lot of opportunities in those that you'll find versus trading the dollar block currencies at the moment.
Definitely. Some cross rates are still, you know, interesting, and they're not affected by the dollar. So, you know, people can more easily take positions without worrying about, you know, some explosive reaction one way or the other.
Right. All right, guys. Well, hey, have a great trading session, and
You do, Blake.
Yep. And for those of you that haven't, make sure that you jump in the chat room when you get an opportunity with the new subscription package with ForexAnalytix. Talk to you soon.
Good hunting, Blake. Hi, Steve. How are you? I'm really looking forward to, you know, your views here, because
hey, Dave.
I know you wait. I figured you might start with Aussie. See how close it got to a third drive. I mean, I thought it was really going to set up for me, and then it was the one. It was the one that was the last one to give up the ghost. I mean, while Euro was plunging, actually still closed a bit higher on the day yesterday.
Yes, it did. Although the very long wick that it created, you know, was a warning signal. Anyhow, don't forget that I was never 100% sure that we're going to see another high. I was only convinced when we were down there that we will see one more high, which we did. So I'm inclined to believe, you know, for me, I had said it a lot of times, 0.7960 was a key level. Yeah. We have currently broken below it. Obviously, I'm not going to short it on a day that it has already dropped by 1.3%, which is a very big move for a currency pair.
Very big.
If you add to that the move we had since just the Fed time yesterday, so it's already a big move. But I can tell you one thing for sure: if we get a daily close below the 0.7960, I'm going to be shorting it. I'm sure we're going to see some little bounce, you know, any retest of 0.7960. I'm going to be short with a stop loss above this high, and I think this is a decent probability trade. I mean, I believe it's, you know, it has more than 50% chance to at least give us a retest of this low at 0.78, 0.77. If not lower, because then we have multiple more targets we can look at, but, you know, one thing at a time. So the risk reward will be there. It's going to be like around 150 pips of distance to the stop loss, and a little bit more than that of distance to the target. So, you know, at least a 1-to-1 risk reward is going to be there. So I think this is an opportunity for somebody that wants to be along the dollar, which, as we said, of course, is still, a questionable position. But I do believe that there is a chance that we're going to see some follow through to what happened yesterday. And if we look at the Kiwi, I'm also seeing an equivalent setup here. First of all, I believe that the move from the Kiwi from up there from 0.7560 roughly was more or less impulsive, and I do see this move higher as corrective. As you see, it's very nicely channeled. You can easily interpret it as an ABC, right? ABC. The rejection yesterday was very nice. Today's continuation looks nice as well. I think 0.73 is more or less a key area here. So I don't think that Kiwi shows us something completely different than the Aussie. They have a different structure, but in both cases, I think that they start to look promising for shorts. So having to do with these pairs, with dollar pairs, I think these ones are the ones that are more appealing with combination, but Blake has already mentioned that with the cable. Blake is obviously looking at a retest of this blue channel. So let's delete all that because it has already happened. So I'm more or less with him. I mean, we might get down to there or perhaps even lower to 132.60. But to be honest, either from here or there, if I see some kind of a reaction higher, I'm going to be living in it. I mean, I'm going to be a buyer. Of course, I know that this is a short, a dollar position I'm talking at the moment. But in any case, first of all, if both of them get triggered, you just end up having a synthetic trade in a sense, because in one case you're going to be long the pound Aussie, in the other case you're going to be long the pound Kiwi. I'm long the pound Kiwi since yesterday near the lows, by the way. I gave that to the chat room. Only 1/3 of a position though, because when you're nimbling in a market that's correcting lower, you can never be sure. So I went to 1/3 of the position long here, and I was willing to go more at 181.50. That didn't get triggered, so I'm only 1/3 of my regular position long here, and I'm waiting to see how this is going to evolve, because I wouldn't exclude the possibility of having another push lower and then a move higher. So I'm just going to stay with 1/3 of a position and give it a couple of days to see what's going to happen from here. Don't forget though that the bigger structure in the pound Kiwi is extremely appealing for longs, especially if we make it to 190, because as you see, this is going to prove to be like a huge bottoming formation, and then it's going to target a lot higher than we currently see. Pound Aussie, by the way, didn't have any problems clearing the previous highs, and is actually now reaching our initial target, which was here, the confluence of the 61.8 and this horizontal zone at around 171. So, I cannot say to somebody be long the pound Aussie here because we were reaching an important resistance, but definitely any pullbacks towards the previous support zone, I will also be lagging a lot for a long. So, perhaps this is also showing to us that we might get some more pound weakness before actually pound gets beat again. We'll see. Now pound CAD is the only one that hasn't even actually budged even a little. I mean, it's currently on its 6th consecutive up day and struggling here to surpass the 200 EMA. There is no question about it being bullish. We warned in advance, but the question is, where do you enter? Because obviously, you would like to see a pullback first. So, that's what I'm expecting to get involved with that, some kind of a pullback, and hopefully, these upper weeks, perhaps with some weakness, if it turns around today, are going to prove that we're getting some momentum loss. I would love to see a retest of at least 163.60. And I would be a buyer down there as well. I'm actually going to create a pattern play as well if we get there. Let's hope so. Now, having to do with the Euro USD, you already said what the setup I was looking for was. It was this very nice head and shoulders formation. We tested the neckline yesterday, but just tested it. We never broke below it. So, this is still a very nice setup, but, it hadn't triggered yet. So at a daily close below 118.60, I would be looking for some euro weakness to start unraveling and perhaps take us, to at least 116.50 or even close to 115. But I remind you that this is also, it's not only the neckline of the head and shoulders, it's also the support of this ascending channel support trend line. So this is a very key level. So in essence, close below 118.50, 118.60, is going to be, technically speaking, a big development. But we're not there yet. And as I wrote yesterday, this is a very nice setup. It's nice for somebody, to be ready to take this opportunity. But until we clear this area, there's no technical damage done yet to the euro. I mean, it still remains constructive. So potentially it can trigger a very nice short setup, but we're not there yet. We're very close, but we're not there yet. And that's why you need to have discipline to the patterns and not trying to jump the gun, because sometimes you see some lovely patterns which never actually trigger. They look perfect, but they never trigger.
Also, Steve, the temptation is you have so much belief in the pattern manifesting that you go, well, why should I wait? I could have a lead into it. Okay.
Yeah, I can have a better reward to risk ratio if I jump in early, for example. Yes.
Yeah, so that's a psychological landmine that people need to get over, because I've lost a leg and I've lost limbs doing that. So, wait, it's not a candle till it closes.
Exactly.
And it's not worth having a 20 pip edge on something that ends up not happening. It's no edge.
Absolutely. Absolutely.
It ends up being, the edge ends up slicing you. So I can only talk about it because I've done it. It's been my own thinking in the past. And
I don't think that there is any trader that hasn't fallen into that trap at least a few times. You know what I mean? Mm-hmm. I mean, it's natural. It's natural. It's in human nature. You know what I mean? And all of us are going to be victims at some point to it. And you know how it is. You've said it, in the best possible way. You've said that you cannot learn experience, right?
Yeah.
And these are mistakes that you need to pay to learn.
Well, you know what? We can help people avoid that landmine, because I guarantee you, in the crowd right now, there's someone out there thinking that.
You know something? I'm sure we are helping people, but we're not helping people avoid them. We're helping people do the mistakes less times, because the vast majority of people, you might tell something again and again and again, but if they don't experience it, it doesn't feel real. The good thing, though, is that if you've heard it like 100 times, you might need to experience it only once before you learn, or twice instead of 5 or 10 times. That's a big difference. There's also one pair I wanted to show here, because we went into the Aussie and Kiwi. It's the Aussie yen, actually. The reason I'm showing this is because we're getting a very nice reversal today after breaking above the highs, after almost testing the 127.2, which I had indicated that is resistance yesterday at 90.50. We almost got there, like we were 18 pips away from it. And it's also a perfect, if you see, by extending this trend line I had here in this ascending wedge, it's a perfect test of that one as well, a perfect test. I mean, I'm not stealing in the trend line at all. I'm just, using the end of all the candles here, the higher part of all the candles. So, I think this is an interesting reversal candle. Let's monitor it. We're currently testing the breakout area. So I think this might also, I mean, when we were here, if you remember, we had talked about two possibilities, either getting rejected from the trend line there and pushing to new lows,
Yeah.
or if we broke above there and they've left the trend lines as we had drawn them, make a push to new highs. We actually got the push to new highs, but today's candle is very potent. And you know,
I'd sell any fib retracement on that.
Yeah, I think it's worth a shot.
Stops over the high, yesterday's high. I think that's a high probability trade. I concur with you.
Yeah, I think it's worth a shot because you know,
nice look.
Any way you slice it. Yeah, so I wanted to show that because you know it's not a perfect setup yet, but you know this is a big reversal, and I think it's interesting. On the other hand, the Kiwi has not confirmed. I mean, we got the Aussie yen to push to new highs. The Kiwi yen though is rejecting the 78.6. Okay, so this is also not confirming that breakout to new highs. So you know this divergence is also of interest to me. Okay, Blake already went over. Okay, let's have a look before we go to questions. Let's have a look fast at silver. He mentioned it, but I don't think he showed it. And also at copper. So silver, you know, broke below the ascending channel. Broke below, although you know it proved that this was an important level because it actually the market held 3 days this area, but finally today it's decisively breaking below it. Now the next area of support for silver is 1670. Okay, and if we want silver to remain constructive, I think that you know it should find a bid and it should do it rather soon. So I think this area is quite important because if this area fails as well, you know, then things become you know very perplexed here in this market because you know it's going to prove that it's once again like a very choppy big range that produces like large moves one side and the other side, but you know in essence it just keeps respecting technical levels, but it's not willing to break one way or another yet. So I'm carefully monitoring 1670. If I see some big reaction from there, I might even be buying silver. Depends also on what the dollar in general is doing. Speaking of the dollar and the yen, I have to say about the USD yen, Blake mentioned it. We have a confluence here in the USD yen. The confluence is this descending trend line that you see passing from there and there. And it's also the 78.6 of this move lower. So, you know, if the USD yen is to pull back from somewhere, I think this is the last area up here. Now, I would be willing to buy a retest of 111 once we get rejected from there, as long as you know the market doesn't like break through it like it's not even there. So you know if we get a pullback to 111, I'm going to be monitoring the way the market behaves there, and I might actually end up buying it. But you know let's get to that first. What I'm saying for now is that 113 is resistance. So obviously, you know, if you bought it earlier, like I know Luca has done, and he got some nice profit from there, you know, you did well. But buying it up here as we speak at the moment, you know, probably not the best of ideas, especially considering also the fact that the 10-year bonds, the treasuries yesterday found major support area. And not only that, that was the 9th consecutive down day. What I'm trying to say is that at least a short-term rebound in the treasuries, I mean, this move that we warned about has already happened, so we can delete that. So, you know, it's not out of the question to get some kind of a rebound in the treasuries before lower, and that can also create the correction we were talking about in the USD yen. So, you know, I wouldn't be, repeating once again, I wouldn't be buying USD yen where we currently are, but I would be willing to buy a retest of 111 if it behaves properly down there. Okay. So let's see what our friends are asking and what they have in mind. Okay, Luca is sharing some charts. Let's have a look at them. Good morning, good morning, good morning to everybody.
A lot of charts were shown.
Yep, let's see. First of all, pound yen. Yeah, I didn't have a look at it, but let's see what Luca is seeing here in the pound yen.
Yeah.
Okay, yeah, you're seeing more strength. Let's have a look at it from my chart and I'll tell you what I think about the pound yen. That's what I think about the pound yen. That's what I had drawn yesterday. I also believe that it has more strength to give in the market. I think this is a 1, this is a 2, this is a 3. But I honestly believe, I think that's what I wrote yesterday in analysis, that we should see a pullback at the very most at 153. So I'm expecting that this is like the last push of this short-term leg higher, and then we might see a retracement before actually pushing once again higher. So I think that, as I said with the USD yen as well, this applies to pound yen. I think that the pound yen should not be bought at current levels. I think this is a bad entry point, and I'm sure Luca agrees with that as well. I don't think he would be buying it up here.
He's bullish.
Yeah, I'm bullish as well, but
Yeah.
I wouldn't be buying it today. You know, at current levels, no chance, no chance in a million. Any pullback towards 148, which is the breakout level, is going to be a magnificent buying opportunity. I'm 100% in agreement with that.
Did you
100%.
go over the pound itself, pound dollar, Steve?
Yeah, we did.
Okay, because you know yesterday was its second drive, so one more high in the pound might set up a swing trade to the downside. So that's what I'm looking at. Do you see the same thing? I must have stepped away when you showed the pound.
Yeah, no worries. Problem with Fed is there's going to be a new Fed in 5 months. That's accurate, Luca. But let me reverse this. Let me reverse this as a question. So why would Yellen make any concessions to what, let's say, the political leadership might want, since she anyhow is probably out in 5 months? I mean, I think she has absolutely no reason not to follow the plan she has in mind. She has nothing to lose. That's what I think. So I think that despite the fact that, as you said, in 5 months we might have a quite different Fed, because she's not going to be the only one getting replaced. I can tell you, on the other hand, that none of them has a reason to reverse the plan they have in mind, at least not if something doesn't happen. You're expecting something from the, yes? Yeah.
I was just going to say, sorry, I was just going to say, it depends on what their future roles are going to be, which we don't know what they're going to be. So I'm sure there's a lot of politics involved. So we can never be, we can never say,
Well,
they have no interest. There's always some kind of interest. But yeah, I mean, I agree with you. I agree with you.
I doubt that Yellen is going to have any role in Trump's administration in the future. I can tell
I'm
you
also sure that Donald Trump's not going to select Rosie O'Donnell to head the chair, to head the Fed. They're not very good friends. So, yeah, it's going to be real interesting to see who he chooses if he goes the Goldman Sachs route, which, most Fed chairmen have, been part of. So we'll see what happens here. It's going to be, I think, the most critical decision he makes.
It's going to be critical for sure. There's no question about it. Our friend here has created the has created the CHF index, and he says that it's currently at support. So asking if there is a trade for some weakness in Swiss pairs. I'll repeat here 2 things. First of all,
Anyway, Anna Cozen's with us, so the picture will clear up. Anna was very bullish euro from like the 107 level. Agreed.
Yeah. And that was a very good call. So I can tell you one thing for sure, my friend. The vast majority of the Swiss pairs are still looking a good short for the Swiss. So we had talked about the pound Swiss breaking above there since we were there. Look at it. We have talked about the euro Swiss, which is resuming its move towards 120. Even if we see the vast majority of the Swiss pairs you see CAD Swiss. We had talked about that, a retest of the triangle, we got that, etc., etc., etc. So there is no question about it. And here is the huge inverted head and shoulders in the CAD Swiss. Swiss pairs are to be shorted. I mean, I don't mean that you should short every Swiss pair, but what I'm trying to say is that you should select any currency you find strong enough, and the vast majority of them are as you'll see, have very bullish setups against the Swiss franc. So yes, I do believe that the Swiss franc depreciation is going to resume, and there are plenty. I just showed you three of pairs that show very good potential. Oh, we have plenty of questions still, but sorry guys and girls, to whatever we didn't get to. Dale has to start the interview. I will gladly have a look at them tomorrow. Okay, Dale, enjoy the interview, my friend.
Thank you, Steve. Okay, Anna.
I wish we had more time.
Yeah. Great analysis once again, Steve. Thank you very much. And Blake, and thank you, Dale Pinkert, whoever you are. Anna, I'm making you the presenter. Looking forward to hearing your voice and welcoming you back to our community. You were one of the most popular interviews that we've had since we started FACE. Can't hear you.
Hi, can you hear me now?
I can hear you now, Anna. Welcome back.
Great.
Welcome
Hi, Dale.
back, my friend. So, Anna, before we get to the markets, it was interesting. I interviewed Shy Girl Tracy yesterday, and she had told me some of the experiences that us men have, kind of like thick heads, and we don't get it. That besides the business being difficult for all people, that there's some gender things that she had to overcome, and that is expressed in your handle. You probably are a female trader _trader. Did you have face those things in what used to be an old boys club, and being a trader in the market and an analyst in the markets, that you had some glass ceiling issues in your career?
No, not really.
Oh, good.
I never really had any of these problems, but I can understand that women would be reluctant to go into the industry. And
why?
When I was trading, when I started trading for myself, I had great ideas about maybe helping women out to trade, and that's why I put the handle there. But reality is that I don't really have any time to do that. So.
Okay. All right. Well, people were really looking forward to you coming back, and put me in that category too. The last interview was outstanding, and you were so right. You're right. $13,000 per contract to go in the euro when you liked it down there. So we had a little Fed action yesterday. I'm wondering where your head's at now after we've had this great move to the upside, and what you're seeing here now.
So euro, I don't know, guys, what's your problem with the euro. We had a massive candle yesterday. That we are not going straight down is because people are just recently, as we all know, the market has not been particularly responding to fundamentals as it should. So naturally, people are wary, especially because they've been trying to short euro for so long. But to me, this looks like this has stopped. I mean, at least for a move to 16 handles or 1690, something like that. So okay. I'm still short. I took a little bit off yesterday, but for me, I wouldn't get worried until we see a 4-hour or daily close above 1925. I wouldn't really worry. I think this is just a small normal pullback. Right. But if you don't have any open position, would I short it here? I don't think so. I mean, I was shorting it up there and taking some off and then reshorting it. But to me, it's going down. It's stopped, and same for the dollar. So am I saying euro is going back to 105? Absolutely not. That's also why I think people are a bit hesitant, because they don't see the big move that it can provide. But it doesn't mean it's just gonna cause some pain on the short side. Same for dollar CAD. I mean, am I saying that it should go all the way up to 135? Absolutely not. But can it easily squeeze to 125 without anything fundamental happening? Absolutely.
Yeah, so these are just normal retrace correction moves that you think yesterday was a pretty good signal for that to manifest.
Yeah, absolutely.
Okay.
Yeah,
All
I
right.
think we sit on it, and tomorrow we should get some follow through. Maybe Monday, as long as it doesn't start going over like 1930.
What do you think the possibilities are if we start getting that 4-hour close back over 1930? Just a deeper retracement?
A bit annoying. I mean, then it's going to go probably to 120 to 1995, just to annoy everyone. But I really don't see it making new highs before it's going to break 118 here.
Okay. Yeah, so it kind of looks like that head and shoulders, and a lot of people will get on it under 1840. That's a neckline, so that's the direction you're leaning on. I don't want to fade you, Anna.
Because the bonds front run this Fed basically, right?
Right.
They were moving first. They are the ones who moved first. So now everyone's looking, oh, why are the bonds not keeping the thing going? But they already moved, and there is many other things that impact the bonds. It's not just this Fed, right?
Well, how about the curve on it though, Anna? Because yesterday, the shorter end of the curve was much more damaged than the long end, and actually like TLT closed higher. Do you follow yield curves, and do they mean anything to you?
I look at it a bit, but I'm not gonna base my, like, I was short ZBs and I got out because it's just a bit overdone, and they have not capitulated yesterday, let's say, as they should have. So let them be. I mean, I don't know what's it's probably positioning, right? And also, as I believe we are due for some risk off in equities, whatever it may cause. I'm not saying North Korea is going to bomb anyone or anything like that, but we are due for some risk off, and people will say no, but just look at this. NQ, for me, this is a wedge, right? You see the screen? Okay.
Yeah, I do. Yeah, so the NASDAQ looks like, and it's been demonstrating some more relative weakness to S&Ps in the last few days. So is this your preferred short in indices? And because I know last time you were looking at DAX, and
I'm short the DAX as well. Yeah,
okay,
I'm short.
Because all the U.S. indices were making record highs, where things like FTSE and DAX were making lower highs.
Yeah, basically, I mean, that time when we last spoke, DAX was at 2750 from what I remember, and it topped first, and it started moving lower, partly due to Euro, and DAX was leading, but it doesn't mean DAX is going to lead now. I think now we have Apple weakness, we might see NQ actually leading. I'll get to the DAX in a second, but basically, I keep hearing the same reasons for this rally that were there in April, May, basically that money managers are not fully invested, and they are praying, everyone is begging for this 5-10% pullback, and then they're going to buy everything they have. This same story people keep telling all year. So what I think is, since we didn't have the 5-10% pullback in the S&P, say, it's basically these people are now realized recently they're going to get fired year end if they haven't bought anything or not performing in line with S&P.
Right. So, there was a hedge fund, actually, some very famous hedge funds lately that have closed not because of redemptions, not because they lost money, but you know, one fund was only up 1%. So they're being fired when the market's up, you know, 10, 15% on the year. So
yeah,
so your point well taken. So how do they make up for performance? So you think they're coming in now and then?
So I think so,
that's
as in the summer, in the August, we didn't have that pullback. So this recent move up in S&P and the increase in commercial positioning, I think people have not seen the pullback, and they have been adding, and they've been adding. And are they going to get paid for this? Not necessarily. I mean, the world is not fair. The market can just turn around here and go down when all these people have been pushed into it.
Okay. So do you think if we break that wedge, that we could retest? It looks like maybe the June lows that we had, where you have a moving average coming in.
Yeah, I think we go 5,750 at least.
Okay. At least. And if we get through there, your gold
we
channel
go
line.
5,600.
Okay. All right. Nice look, Anna. That's a classic 3 drive to a top formation in my work.
Yeah, I mean, the thing is, where am I wrong? If we start having daily close above the wedge, not above the horizontal, but above the wedge, yeah, then I'm wrong, and then we can rip on. But usually, when it's about to break out, we do it from a horizontal, so the level is relatively horizontal, and then we barge through it. But this wedging thing,
yeah,
this wedge has been going on for so long, and people are just slowly putting money and putting. I mean, I just see it moving lower. Then, of course, I don't know what happens. We'll have to see how it acts as it goes lower. But I definitely wouldn't be buying here, and I like the risk reward over short. I like it's becoming easier for me to be short than, let's say, somewhere here earlier in the year.
Yeah, because you've watched momentum wane, et cetera, and maybe this is a big distribution pattern. And you know what, Anna? It takes time to turn around a battleship, doesn't it?
Well, especially big turns. I mean, you need time to create the structure, but otherwise you're not going to get a big sell-off. You're just going to get this little annoying things.
Okay. Any commodities on your radar screen? Crude's been acting pretty good.
I mean, for now I'm flat. I'm short copper. I took half off. Where's copper? I'm sorry. Just because not being complicated is credit creation falling in China. This massive candle here, great, flows through the 20 moving average. I sold some on the pullback, took half off, and then letting the rest run.
Yeah, it kind of lines up. Copper blew off while the market was still going up. All bull markets are roofed in copper. Maybe this is, well, it kind of ties in with your look for a correction in the indices, doesn't it?
Yeah, and the DAX, I mean, I am shorted here. I realize that it could basically above 26.40 on the future. I'll abandon it.
Mm-hmm.
But here I think definitely a pullback into 23.5 is on the cards.
Okay, so that's actually looking a little better than the NASDAQ. So you're not looking at for as much there. How about the FTSE, Anna? I mean, that's been I was schooled that London always led our markets, and the FTSE has rolled over pretty good. I mean, it hasn't made a new high for a long time.
Yeah, I mean,
to me it looks like a weakness. Yeah.
Yeah, clearly. I mean, if you're going to express a view on the FTSE, you are expressing a view on this Brexit situation, and I'm just there is too much uncertainty about how this Brexit is going to go. I generally don't know. I mean, I can have an opinion, but I don't think it's a tradable opinion.
Okay.
Right.
Although if you covered up the title of what it was and you just looked at the chart, you would have to admit, compared to almost everything out there, it's the weak sister. Excuse me using a female gender on that, but it's the weak sister.
Absolutely. But the thing is that I don't know if cable is going to hold up here as well.
You know, I wanted to ask you about that because, you know, we made new highs in cable yesterday, and it was a non-confirmation in my view. I'm actually maybe looking for one more push in cable to the upside as possible. Where's your head at on cable? Tougher call than euro, isn't it?
Yeah, I mean, the thing is, I think we are not done testing here, so this 36 area is going to be, I agree with you, it's going to be retested, but do I think it's going to go higher than that? I'm not sure, unless we get someone coming out and saying, okay, second referendum on the shape of the deal, new elections, some kind of shake-up that calls this whole Brexit into doubt. I don't see it going much higher, to be honest.
I'd be curious about your view on U.S. dollar yen. I mean, the bottom came out of nowhere. It was a tremendous move. So if you're looking for a correction in NASDAQ, we should be looking for a pullback in U.S. dollar yen, don't you think? A little risk off here?
So my yen chart is this. It's gonna, I'm looking for a turn now, and if it's not gonna turn now, it's gonna turn here. So here, basically, it's already kind of turning. If we have a close below this 200-day moving average today, bearish, sell it.
So you gave me more conviction because that's what I was talking about at the opening of our webinar today. So
absolutely.
I bring you on for selfish reasons for my own trading. So that because you know what, I don't like, if I got to see your work every day, I wouldn't want to be on the opposite side of the market of you, Anna. And, you know, that shows by, you know, I'm getting great Twitter response.
I don't like it. I don't like it when people flatter me.
You don't like being complimented?
No, not in trading.
Okay. All right. Well,
it's okay, but I try to keep my zen and my stoic stance and not get overly excited and.
Okay. Well, you're so balanced. It threw me off balance. So thank you for sharing your views. Anything else on the radar screen that you'd like to share? And
what else?
You've covered a lot of ground in a short period of time because, you know, you get right to the point. So I'm wondering, that's not a compliment, that's just a fact. So anything else that you're looking at, maybe any of the yen crosses?
I don't like all these other crosses, to be honest. I like simple products.
Okay.
And I mean, sometimes I'll look at them, but I'm not going to go out and give my opinion on things I haven't looked at recently.
Bearish gold, and
gold,
you know.
Well, I wouldn't sell it here after it dropped a load, but I wouldn't buy it either. It's hawkish Fed. I mean, gold. What is it doing? I have to see what it does. Here, basically, is it going to bounce or not? And then maybe I need to see some kind of price action there.
Right. Do you think that if you get a break in, you know, most people are going to think that if you're right about risk off in the market, that would buoy gold. But that's not necessarily the case, is it? They could go down together.
Of course, everything can go down together. Bonds, gold, stocks, oil.
Right.
It's possible. I've seen that happen.
Yeah, like a whiff of deflation. So how about the oil? A lot of the bears are thrown in the towel now. Now that
oil, where is it? Oh yeah, okay. So it's basically in between these two areas. I'm not interested. It's a chop zone, like 49 and a bit, and 51. I mean, I'm not seeing anything.
No man's land. Yeah, no man's land.
Convincing to do anything. If it pushes higher and then fails, I'll short it. Yeah, structurally, I wouldn't buy it up here or even here. I mean, I might buy it way down somewhere if it reverses, but I mean, still fundamentally bearish oil, right?
Okay. And Aussie almost made new recovery highs and then failed after the Fed.
Aussie is going further down. We all hope and pray for some recovery. I mean, I intraday shorted it yesterday on the Fed. I got out. Didn't get back in because I thought we might get a bit more pullback. Now I'm waiting for a pullback to get in.
Okay.
But yeah, it looks bearish. Yeah,
Okay.
I mean, it's an annoying little time now that nothing is really properly moving, led by equities. So when wall is this low, people start getting a bit depressed. And I mean, your options are, what are your options? You can trade crypto, you can shorten your time frame of what you trade with the risk of being chopped up, or you just sit it out and do very little. So
Are you trading crypto, Anna?
you know what? I looked at it. I did a couple of trades. Right now, I have nothing on it because I'm just too busy. I need to look at it properly, and I need to see some extremes, and I'm not really seeing it.
How were your executions on your trades?
What do you mean? Oh,
I mean, were they good fills? Did you throw market orders in?
Liquidity is pretty crap, right? But I mean,
Yeah.
it is what you expect with
Right.
the move doing, and it's a new product and stuff. But it's definitely gonna be more interesting. But it's just so many things one can actively look at. But yeah, even if vol stays like this or gets worse, then yeah, we'll all be looking at crypto soon, I tell you.
Okay. So all right. So you see it as an alternative to fiat currencies. It's here to stay. It's just which one and in what form will you be able to trade it. But you think this is a trend that's only going to be entrenched and expand.
It's not gonna go away. I mean, the thing is, when I wouldn't be surprised if they eventually do an Ethereum bond, and yeah, then that thing is gonna go much higher. I was long a bit of Ethereum and then I got out, but I might buy it again soon.
Yeah, China can't stop it, in other words, and Jamie Dimon's wrong.
No.
Okay.
But what is going to be the leader? What is going to be the cryptocurrency that's going to be used? It's very tricky because the governments can make it much easier to use whatever they can enforce usage of whatever cryptocurrency they want you to use by making it much more acceptable.
Right.
Or
right.
So it's the government issue is a bit tricky, but it's here to stay. So clearly, a lot of them are going to go to zero.
Okay. Yeah, kind of. You know, I kind of use the .com analogy. You know, even though the .com was a bust, out of the ashes came the leaders that we have today. So a lot of them went away, but it set the stage for things like Google, etc.
I mean, do I want to read up on blockchain and all this stuff? Do I want to get all this extra knowledge in my head? Probably not, but I kind of have to.
Yeah, I know. They'll have to drag me kicking and screaming too.
Yep.
So you know, basically, let me try and summarize what you've said. We have a rising wedge, a wedge in NASDAQ looking for a correction. The Johnny-come-latelys are in the market now, ready for a shakeout. Euro looks
this thing doesn't mean anything. You can just puke straight through it.
Right. Okay. And Euro looking for lower, maybe down towards 117, 116. And it's not the end of the Euro uptrend, it's just a correction. Canada could get to 125. That still could be just a bear market rally. Looking for spots to short Aussie, and the yen could be topping today. So you really edified the community. And
yeah, I'm yen either one more push up and then exhaustion,
Right.
or collapse and then close bearish and then just short it.
Okay. So Anna, the only way people could follow you is on Twitter, or is there any other location?
Just Twitter.
Okay. So I want to thank you for coming back. You got a lot of views last time. I bet you got another great response, and you gave me some ideas today, and I appreciate it. So thank you very much, Anna, for coming back, and maybe we could do this again, you know, towards the end of the year, beginning of next year, and always appreciate you taking your time, and I'll hold back compliments next time. I don't want you to lose your zen.
Thank you.
All right. That's Anna Kogan. That's Anna Kogan Nasser, and a lot of people thanking you for being here, Anna. Good hunting. I hope pips rain down on you till we speak again. And that's it for us, Face. Have a great day. Tomorrow's your last day of summer. Enjoy it. And above all, don't just count your pips, count your blessings. And we'll see you all tomorrow. Thanks again, Anna.
Thank you.
Okay, and don't forget, guys, October 2nd, Blake and Steve's and Stelios' special end. So click the link, and someone even loves you here, Anna.
Oh, yeah.
Pierre. That was the name of my poodle. Oh, okay. Yeah, I had a poodle named Pierre when I was a kid. I know you love animals. All right. See everyone tomorrow. Adios. All right. Bye-bye. Great interview. Great session. Everyone have a good session. Yeah. Thanks for taking it in stride, Pierre. Kevin, see you. Martin, Manny, Arvinder. Anna, it's @female_trader. Is that correct?
No, it's a female trader.
A female.
I don't even know my female trader here.
All right. There it is. And with an A. Okay. Yeah. And there's Anna with what is that? A cheetah?
It's a cheetah.
Oh wow. They're pretty fast, huh?
Indeed.
All right. There you go, guys. Have a great rest of the day. See you tomorrow. Thanks once again, Anna. Adios.
Bye.